I'm going to turn to the Investor Advisory Service and give you a performance update. You may have noticed that the Investor Advisory Service was named to the Holbert Investment Newsletter Honor Roll for 2020-2021 for the 11th consecutive year. Of course, we're very proud about this because only 3 newsletters made the Holbert Honor Roll this year. 6 newsletters were on the Honor Roll last year, including the Investor Advisory Service. And of those 3 newsletters, only one has been on the Holbert Honor Roll for 11 years, as we have been. The other one has been on the Honor Roll for 5 of the last 11 years, and not consistently. So our performance has been exemplary. Holbert, you may be familiar with Mark Holbert, who for many years published the Holbert Financial Digest. He can discontinue that a few years ago, or it was purchased by Dow Jones. They discontinued it. He continues to operate a website at holbertratings.com, where he tracks the performance of several hundred stock newsletters. He's offering essentially a service that audits the results. So we do pay for him to audit our results and provide that verified third-party validation of our performance. And you can find it for free as an individual by going to holbertratings.com, and you can sort through all of the different newsletters for different periods. The Honor Roll criteria are that the newsletter must outperform each bull and bear market cycle over the long term, typically through 6 bull bear market cycles. So the starting period for this year's Honor Roll is in April of 2000. According to Holbert's analysis, Honor Roll recipients are the most consistent performers of all stock newsletters. They go up more in bull markets, go down less than the market in bear markets. So they're not outperforming during, or they're not always moving, have positive returns during these periods, but they're not performing worse than the broader market. It'd be very difficult to have a newsletter that was able to consistently deliver positive results in bull and bear market cycles. Although a lot of newsletter publishers would like you to believe that that's possible, evidence shows that there's nobody who can do it. But what's interesting about the Honor Roll, according to Mark Holbert, is that the recipients of the Honor Roll, those who are able to outperform over the longer term, provide a less bumpy ride than newsletters that run hot and cold. And it's the same thing, you'll see the same phenomena with mutual funds. In a particular year, perhaps the Brazil Emerging Markets Fund will be up 65%. And so a lot of capital goes into those newsletters. And the next year, they're down 40% because it's just very difficult, 1, to deploy all that additional capital, and 2, the market conditions are completely different. Now, if you looked at that and said, well, I want an emerging markets fund that's able to generate returns above the emerging markets index that I'm tracking over the longer term, then you're going to have a much less bumpy ride. You're not going to get the huge thrills of large gains, but you will at least outperform that underlying index. But beyond that, Holbert's findings are that the newsletters that are on the Honor Roll outperform on an annual basis those newsletters that are not, on average. And that pattern he's discerned since the mid-1990s. Here are the 3 Honor Roll recipients for the 2020-2021 Holbert Honor Roll. The Investment Reporter had the highest gain, annualized gain since April 2000, 10.95%. The Investor Advisory Service was second, 10.48%, and then Bob Brinker's Market Timer at 8.14%. The Investment Reporter, more fundamental focus, like the Investor Advisory Service. As I said, they've only been on the Honor Roll for 5 years. Bob Brinker's Market Timer and IAS have been on it for 11 consecutive years. So that 10.4% return of IAS, when you compare it to the comparable return of the Wilshire 5000 during that period of 6.06%, really gives you a sense of how how strong that performance is. And there are a lot of investors who think, well, gosh, 10% return is not very exciting. But if you were in an index fund in that same period, you would have a return that was 40% lower than the return from the investor advisory service. And when you compound that return over time, you can really generate significant outperformance. When you look at the investor advisory service long-term performance, here we are as of November 30th for the 1, 3, 5, 10, 15, and 20-year periods. The IS is in green, the Wilshire 5000 is in the orangish color. You can see we've outperformed each of those segments. We have been updating our performance on the Investor Advisory Service website on a more or less monthly basis using the Hulbert data, so you can visit it at any point and take a look at how the returns have been going. We tend to focus on our 10, 15, 20-year returns because we are a long-term focused newsletter. We don't expect to outperform the market in a year-to-date or a one-year period necessarily because our picks are focused on taking advantage of mispricing over the longer term. When we look, Hulbert started tracking the Investor Advisory Service in 1995, the beginning of 1996. And this is the annualized rate of return. Since then, 12.6% compared to 9.5% for the broader market. And if you think about the longer-term annualized rate of return of the broader market, the S&P 500 and the Wilshire 5000, close to 10%. If we're at 12.6%, that's a pretty significant outperformance level, and nothing that should be kind of brushed aside. It's a pretty remarkable accomplishment. So I'm very pleased with the team for the results that they are able to generate and continue to generate even during tough markets. According to Mark Hulbert, the most important reason to pay attention to the newsletter honor roll, in my opinion, it helps you steer clear of particularly risky services that, even though they may produce stellar long-term returns, require more intestinal fortitude to follow than most investors possess. So there could be newsletters that have phenomenal track records, but they have huge swings in their performance, and that's very difficult for investors when you're looking at the returns and you're looking at your portfolio and you're seeing it the value of your portfolio decline, and a lot of investors start to get scared, start to get nervous, and sell out or stop following the strategy during those periods. And so if your results are a little more consistent, it can make it easier to follow. And that's one of the key advantages of the honor roll. If you are not a subscriber and you want to take advantage of it, if you're a Better Investing member, check out the Better Investing member price on the Better Investing website after you log in. If not, you can use the promo code 11 for 11 at investoradvisoryservice.com before the end of the year and subscribe at a pretty good discounted rate there. So I invite you to check that out. Once again, we're very pleased with that investor advisory service performance.